Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nanta Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, good to see some bit of green on the screen.
Yeah,
After the kind of sell-off, panic-driven sell-off that we saw in the market yesterday, the sentiment was very poor. But right from the start, we had a triple-digit gain on the index. The Nifty, in fact, was looking to reclaim that 23,800 mark, but ended just above that 23,700 mark. So almost a triple-digit rally coming in, 90-point uptick on the Nifty, and Sensex as well up somewhere around 230 points or thereabouts. Mid and small cap indices were doing better. The broader end of the markets fared better today. The mid cap index was up 9 tenths of a percent, but the small cap index, that gained somewhere around a percent or so. So the small cap index was clearly outperforming today. The advanced decline ratio was also much better, given the fact that we saw 1:9 kind of NSE advanced decline ratio yesterday. It was favoring gainers today. So some bit of relief there, a relief rally or a relief up move is what we saw in the market today. The NSE advanced decline ratio was at 3:1. Volatility gauge, India VIX, cooled off quite a bit, 6% yesterday. Remember, it was up 16%.
mm,
That was the kind of volatility that was there in the market yesterday. Most sectors were trading in the green today, barring the IT pack. Yet in 9th January is when TCS, industry bellwether, tech bellwether, so to say, reports numbers. And ahead of that, some bit of jitters, IT index down by somewhere around 7 tenths of a percent, and some of the losers also on the index were from the IT pack. Metals and oil and gas, these two sectors took the lead today. In terms of individual movers, ONGC was a clear outperformer today, almost a
yes,
4% uptick.
yes,
Yatin, CLSA has
upgraded.
rated it,
Yeah.
upgraded it to high conviction buy, and the stock was clearly doing well. Target price at 360 rupees or thereabouts. Life insurers were doing well today, so SBI Life, HDFC Life, those two are among gainers. Tata Motors, Reliance Industries among the top contributors to Nifty's gains
Mm,
today. Good to see that stock also jumping somewhere around a percent or so. You have Bharat Electronics and some of the metal names like Hindalco, JSW Steel also among the gainers. What didn't do well, some of the tech names dominating the list: HCL Tech, TCS, Tech Mahindra, all of them under pressure. You had Trent also, among the losers, and so was Aisha Motors. Even Hero Motor from the auto pack under pressure, and so was BPCL. Started the day on a good note, but gave up most of the gains. But I think individual movers, quite a few of them, when you
mm.
look at the broader end of the markets, ITI, one stock that was up somewhere around 17% yesterday, came under a fair bit of profit taking.
Absolutely. And if you look at the markets, broadly the advanced decline ratio was good. In fact, it was almost, 2:1 on the National Stock Exchange. And if you look at the mid cap gainers, the list is long. Stocks like Kirloskar Brothers, Aegis Logistics, RCF moving anywhere between 8 to 15%. We had stocks like Biocon, post that brokerage note doing well. Stocks like BSC continued to rally. That stock was up 6%, and stocks like Reddington, signed UPL, Pfizer, IFL clearly doing better in trade. What was not doing well in trade was KC International, 5% down. Zomato down, 5%. We'll talk about the stock in detail. We also had stocks like Naukri post the quarterly update. Stock fell 4%. So mixed trade, but broadly, today was a day of consolidation after yesterday's hammering. Today we had some stocks bouncing. Stocks like Vishal Megamart, a recent listing, that stock saw some 8% gains coming in on good volume. So, stock specific action, Nandita,
Hmm.
continues on Dalal Street.
That's true. I think notable to talk about Berger Paints and Axo Nobel
Mm,
as well, given the fact that it's a CNBC TV 18 exclusive that Berger Paints may be in the fray to buy Axo Nobel India operations, right?
mm,
Because they are looking to exit their India operations by selling as much as 75% stake. JSW Paints and Indigo Paints are also in the fray, and CNBC TV 18 also reports that the deal could be valued at somewhere around 10 to 12,000 crore rupees. So that's one sector in focus in today's session. But of course, you mentioned Biocon, Yatin. Good, healthy
mm,
7% kind of gain coming in there. The stock has seen, or the company has seen, a spate of good news in terms of regulatory approvals from across the world. Today, of course, the latest being the approval for psoriasis drug from
mm,
the Japanese drug regulator. Now, this drug has been developed and manufactured by Biologics, its biologics arm, and it will be commercialized and marketed in Japan by its exclusive commercial partner, Yoshindo. So this is one shot in the arm for Biocon. But aside of that, you also had an upgrade coming in from Jeffries on the stock. They have upgraded the stock to hold from
mm,
underperform. Target price has also been revised to 400 rupees from 280 rupees. That implies an upside of 40%
Mm.
or over 40% from yesterday's close price. Uh, Quite a few pointers that Jeffries has mentioned as a reason to upgrade the stock. The first one being the clearance of Bengaluru Biologics Unit
Yeah.
by the US FDA, and that is being viewed as a big positive. Now, US FDA had classified the Bengaluru Biologics plant as voluntary action indicated back in
Mm.
October. Now, this is the second best classification after no action indicated.
Yeah.
That means US FDA had given its observations, and the company had also responded to it, and the response was fairly satisfactory. So that's one positive. In addition, I think Biocon Biologics also got the USFDA approval to launch its biosimilar version of Jason's Stelara in early December. Now, this drug is slated for a February 2025 launch.
Yeah.
So that would be another pointer to watch out for. And with all these approvals, Jeffries has said that the growth visibility for biologics business has increased for Biocon, and that would be a catalyst for the stock going forward. Some of the key events or pointers to watch out for in this year, in 2025, according to Jeffries, is the classification of the Malaysia unit that is under USFDA radar currently. The USFDA had
Mm.
classified the unit as official action indicated back in October. Now, the company is awaiting the classification. If that comes in favor of the company, that will be another catalyst for the stock. Aside of that, a couple of approvals for insulin aspart, market share ramp up in the psoriasis drug and autoimmune disease drug. These are some of the catalysts for the stock going forward, and market share ramp up in some of the other drugs like aspart and semaglutide are some of the other catalysts going forward. Looking at the stock has done well. I think the last 1 year it has rallied almost 40% or
Mm.
thereabouts. And if these approvals come by and the
Correct.
classification of Malaysia unit also comes in favor of the company, of course, as Jeffries has mentioned, 400 rupees will be a reality pretty soon.
Absolutely, and the stock today rallying almost 7-8% in trade. But what was not doing well in the market is Zomato, and today we have Jeffrey, which has downgraded the stock to a hold. Target price has been aggressively cut, from levels of 335. Now the new target is 275, and the reason why Jeffries has cut almost 60 rupees in terms of target price, which is almost 20% or so, is the competition which is growing in the quick commerce segment. Remember, now the markets after the food delivery business are also focusing on the quick commerce business, which is Blinkit, and with competitors providing faster quick commerce services, discounted quick commerce services, along with the pricing which is there in the marketplace, clearly impacting the profitability of players like Blinkit, especially the competition from Zepto and the old school boys like Reliance Retail and Dmart, which are also introducing their version of quick commerce. There could be some headwinds for the business. In fact, if you look at the EBITDA estimates for Blinkit, that has been changed aggressively by Jeffries, which is the reason why they have lowered the target price. So, with higher competition, the quick commerce segment, the discounting which is increasing in the market, probably would impact the margins in the near and medium term, which would mean that it is a long path to profitability. The kind of numbers probably we saw 2 quarters back, or 2 quarters in a row, probably are not holding true for the future, and hence brokerage is now turning cautious on Zomato, especially their quick commerce business, which is Blinkit.
That's true, Yatit, and the stock has not been doing well. If you look at the 3 month return, it has given negative returns, I think, to the tune of 10% or thereabouts, and competition is increasing. We may have Zepto anytime
Yes.
in the last quarter of this current fiscal. And of course, you also have Amazon that has thrown its hat in the ring. So, yes, competition in the quick commerce
Mm,
segment is clearly intensifying, and of course, Zomato clearly feeling the heat given the
mm,
fact that the target price has been scaled down below the 300 level as
mm,
well. Remember, the stock almost doubled
mm,
in 2024. Another internet stock that's on my radar today is India Mart. The stock was all fired up, 7% higher on this stock. It has won, or it has earned, a double
mm,
upgrade from JM Financial. Now, the brokerage has upgraded the stock to buy from sell. And the target price, although is not very a lot higher than where the stock is at the current juncture. 2450, that's the target, which is implying a potential upside of 13% from yesterday's close price. Now, JM Financial has said that the stock has seen a lot of derating.
Yeah.
It has shed almost 28% or so in the last 3 months. And no surprises, right? Because second quarter earnings were quite underwhelming, right? We saw collections go down, and subscriber additions
Yeah.
were also quite lower. And I remember the day the company reported numbers, it was down somewhere around 16 to 18%, and it had also attracted a lot of downgrades from brokerages. So sharp deceleration in collections, growth in the second quarter. It was at 5%.
Hmm.
It came down from double digit to single digit, and weak collection and low subscriber additions had hurt the second quarter earnings. And companies' weak collection per customer growth also coincided with the consistently low net subscriber
Yeah.
additions over the last few quarters. In fact, it had seen muted paying subscriber additions over the last 6 quarters, and that was one of the biggest pain points for the company in the second quarter. Now, JM Financial doesn't really expect a lot of improvement in the third quarter metrics, but on a medium term basis, it is expecting the medium term collections to come back to low teens. So that will be a good thing, because right now it's at 5%. That's what we saw in the second quarter. Now, JM Financial has pointed out that if India Mart adds 2,500 to 3,000 paying suppliers per quarter in FY26, it will result in mid single digit growth in the paying suppliers. And that will be a good thing, right? Realizations also are expected to improve at a similar rate. Now, JM Financial has pointed out that it could only happen, like realizations may only go up at a similar rate, assuming stability in the silver supplier churn and regular price hikes in the platinum category. EBITDA margin could also remain elevated around that 34 to 36% mark in the absence of any meaningful growth in investments. Top line estimates are largely unchanged. Margin upgrades have led to 2 to 5% increase in FY25 to FY27 estimates. Another important factor that JM Financial has pointed out is that the stock is trading at a 50% discount to the 5-year average after the kind of correction we've
Correct.
seen in the stock. And this significant discount provides a strong margin of safety, according to JM Financial. So, no, great improvement expected in the third quarter, but over the medium term, collections are expected to go up, which could bode well for a stock like India Mart Intermesh.
Absolutely. And post the report, the stock witnessing a 5% move. Obviously, the stock is in FNO quite liquid, and good volumes and price action today after the report.
Well, then, those were all the stocks on our radar this afternoon. But of course, just about 2 sessions to go when we actually kickstart the earnings season, the big
Yeah.
bang earnings season with technology heavyweight TCS reporting numbers. So it'll be all about IT stocks as we go ahead in the week. But with that, I think that's all we have on the show for you today. Stay tuned to Money Control for all your other news and updates, and have a great evening.